Hey traders, good evening. Today is Sunday evening. It is December the 12th, 2021. Working our way to the end of the year here. This is our weekly preview action plan for the week of December the 12th. We are obviously getting close to the end of the year, and we've got a lot of activity going on. You can see a little abnormal for us for starting a week. Not abnormal for us to end a week, but abnormal for us to start a week with this many positions already on in our model portfolio. We'll go through these really quick and then we'll line out the week, December 13th through the 17th. It's a little bit of a light week, especially earnings wise, but it is going to be really focused on the FOMC meeting minutes coming out on Wednesday, and we'll talk about that. Let's go through our open positions here. Our first two positions on the list are similar trades with opposite directional biases. They're leaps covered rights and leaps on the call side and on the put side. On the put side, we've got Apple. This is a leap covered right trade. It is a bearish trade. We're using puts on this. We're bringing in close to 16% a month in cash flow on this. That obviously would annualize out to be very close to about 200% a year. We might do a little bit of an adjustment here on Monday to bump up our covered put on this trade, just depending on how strong Apple remains. Apple, of course, has been almost parabolic in its move, and we believed that right here, where it broke this sort of all-time high and it broke through that very strong resistance level, we believed right there that it was overextended. So if you believe it's overextended right there, you got to kind of believe it's even more extended up here. We continue to like that trade, but it is a longer-term trade. All of our leap covered right trades are longer-term trades, and this is a cash flow trade. So we'll continue to cash flow that and bring cash flow in on that. Our Futu trade is the same. It's a leap covered right, but it's on the call side. Now this one has been a little bit more successful for us right off the bat. We've adjusted this a little bit too to sort of juice the earnings potential of it. And we might do that as well again here this week, potentially dropping our cover down from 48 to maybe 47 or even as low as 46 to try to juice the income potential a little bit more. There's still $100, $112 to be exact, of theta potential in that for this week, and that's been cash flowing really, really nice for us, especially considering how little we had to put into that. About $5,700 in the Apple leap, but only about $1,900 in the Futu leap. We've got a gold trade on. This is a purely technical trade right here. Still got 16 days to go in it, but it looks pretty solid right here. 1710 is our short leg on gold. That would put us down here really below this sort of demarcation point that you can see that's kind of gone all the way back, excuse me, to March of this year. So I think that's a pretty good technical entry point and a pretty good support level for gold. Again, still 16 days to go in that trade, but a nice potential return on that trade. I think we set it up for a 13% ROI when we initiated the trade. FXI is a wheel trade. This is finally expiring for us this week on Friday. We've juiced this trade as well. We actually took some profits on the original wheel trade that we had here because it was, pretty much fully profitable from a credit standpoint. And we actually rolled the put up to try to enhance our potential of actually getting assigned on this. But FXI has just been really, really strong in spite of everything that's going on in China. And so we'll see if we can get assigned on this. If not, the ROI on just the credit has been awesome for us as well on that. But that's a trade that expires for us this week as well. Peloton, we've been bottom fishing on this for a couple of weeks now with a cash secured put. It's a wheel trade as well, trying to find an entry point down here on the bottom that makes sense. Who knows where actual valuations on Peloton will start to make sense. It just continues to drift lower and lower and lower. Again, remember, this was a pandemic stock that was pushing $200 a share, and now we're pushing down towards $30 a share. But we'll continue to roll this. It continues to bring in nice cash flow for us, and I think at some point we will find a little bit of a bottom here as well on Peloton. Our lithium trade was essentially a synthetic stock buy. We did that right at the money at $30, and it's drifted a little bit lower here. So this is essentially basically just a 100 share long position in lithium. We just kind of need to wait these 5 days right here for the actual assignment to take place so we can turn around and cash flow that. Only issue really that I have with the lithium position is that it does only have monthly options, and so we'll have to go out to January 21st to cash flow this. But right now you can see, and again, this is out 40 days, but you can see about $130, $130 on 100 shares is what we would bring in for that, what would for us essentially be an at the money covered position, covered call trade, and $130 a month on that would be an absolute awesome cash flow for us. So I'm excited to actually get the shares in that and get assigned on that. We've got a nat gas trade. We've been trading nat gas on and off for a long time. It's a scary trade. We call it the widowmaker. It's a widowmaker for a reason. It's had 100% fluctuation in the last little bit. This may not look like a lot on a chart, maybe almost up to 650 on the upside and down here to almost 350 on the downside. It's a 100% move, and that's a ton of movement in a very, very short period of time. You just got to go back to the 1st of October for that move to have transpired. And we were obviously short nat gas up here. Now we're working a long trade down here. Now this just has 16 days to go in it. We're short down here at $3.20. We're at almost $4 right now. I think that's a really, really solid trade and obviously an awesome ROI. If your nat gas, if your nat gas trades work out, whether they work out or not, they're always very, very high ROI potential trades. But they are called the widowmaker for a reason. But that trade's cash flowing for us quite nicely right now. It looks pretty solid. ZM is basically just a technical trade as well. Down here below this support level that we're seeing right now, illustrated in the stock. That's been cash flowing pretty well for us. It does expire this Friday as well. Looks really solid. No action needed there. 6A, that is the Aussie. That's the Aussie dollar. This is a 26-day trade. It's basically a wheel trade as well. It's a cash secured put trade that has an awesome, about a 12% or so ROI potential on the trade. It's already cash flowing for us right now. That means that we may either wait to get assigned in that, or if it doesn't look like we're going to get assigned, we might book a profit earlier on that trade. ZC is our corn trade. It's a very, very, very high probability trade, but because of that, it's a little bit lower ROI than we would typically see in our softs, in our commodity trade. ZC was about I think about a 7%, 6% ROI potential when we put that trade on, but it looks really solid right now, and we'll continue to hold that for just a little bit longer and let a little bit more cash flow come in on that. Now the wheat trade, very similar trade, only it only has 11 days to go in it and a much higher potential cash flow on that, about a 9% ROI potential on that. It's looking really solid as well. It's a credit strangle. There's no real action needed there. Our DWAC trade has bounced around quite a bit on us, but it looks really solid right now. We've adjusted it, I believe, twice already. Still have a really low cash commitment in that, so my position sizing is really solid. I could adjust this 2 or 3 more times needed if needed, and not have a position sizing or a buying power issue on that. So it looks really solid right now. Obviously, we have rolled the previous debit in that trade into this new trade, and we did it at a credit, and so you can see the numbers are just astronomical right now. I got about $1,400 committed to the trade with almost $1,100 of potential profit on it. Again, that's rolling, including the debit that we've rolled into it, but it looks really solid right now going forward. 6E, that's the euro, same thing as a lot of our currency trades. They're basically just wheel trades. We'd love to get a sign down here at 111. If we could get a sign down here, you can see that the euro's been beat up pretty good. If I could get a sign down here at this 111, right in this area right in here, and I would take that all day long. And you can see, again, you could roll that out. You could cash flow that. If we looked at maybe just doing it maybe at the money right now, you can see on that trade that we would bring in almost $3,200 max profit on that trade. That would be a nice trade. Obviously, if we got to that point, we still got a ways to go on that trade to see where we're at. 26 days to go on that. PayPal is another cash secured put sale. It's a wheel trade. We're down at 170 and we're at 188 right now. I think that that's a pretty safe trade in terms of probably not getting assigned on that, but that's okay too, because that's about a 5% ROI trade and it looks really solid as well. No action needed there. ZB, we got the 30-year Treasury bond trade. This is another sort of non-correlated asset trade that we like to have in our portfolio. We love to trade things that are in the market but not of the market. That's a good example right there. And it has already booked a pretty solid profit. We're not quite at a 30% capture rate on that yet. But when we do get to a 50 or a 60% capture rate on that profit-wise, we may look to book profits on that and not sit in that for the full remainder of the 11 days that we got going. We got the Russell trade going on. This is our long-term index trade. We try to have at least one, if not more, of these going on almost all the time, something within a 30 to 45-day window period of time. And we got the Russell one going on right now. It looks really solid right now. Obviously, the return potential on it is massive, about a 25% ROI potential. We put this on just over, I think it was about 31, 32 days to expiration is when we put that on. We're down to 26 days now, and it's continuing to perform really, really well for us. Obviously, the more time we can get into a trade, the more flexible they are, the less gamma is involved in them, the less vega affects it. All those things make it just a little bit more of a passive, easier trade to trade. It's not something that you got to stare at your screen all day long, right? Our DocuSign was a trade that we did, was a wheel, well, it wasn't a wheel trade, it was a earnings volatility crush trade that we that actually blew right through our short strike at 185, if you can imagine. Our short strike was up here at 185. We thought that that was a pretty good level right there. That had been a demarcation point for a long time. It had been a really big support level. Blew right through that all the way down here. It was looking like it was going down to 125 here for a moment. We took the assignment on it. We've turned around. We've owned those shares now, and we're cash flowing those. And we're doing it with a ratio trade. So it's a 2-to-1 ratio here on my covers on that trade. And the goal here, again, was to bring in about $10 per share per month, or in other words, about $1,000 per month in income on this trade. I do have about $8,600 tied. Well, I've got $8,600 tied up in the trade because it's a ratio trade, but I have this $8,600 tied up in this trade. The idea here was, look, if I could bring in $1,000 a month in income, this trade would work. It's this number right here, this ugly red number, that would work itself out over time quite nicely. And so obviously it'd be helpful for us if this could move back up to the 185 level. But what's really important, probably more so anything long-term, is that it stabilizes here. And it does look like we have sort of found a support level down here for this level of stock. It's not really moving any lower, not really moving any higher. It's sort of equilibrated here, found its level that it feels comfortable sort of consolidating at until we figure out where the next move is going to be. The key thing here is, can we generate about $250 a week in income, or roughly $1,000 a month in income, to hit our income goals on this trade and make it make sense to continue holding it? It was pretty tough that very first week that we got assigned. I don't think we brought in maybe more than 120 bucks of income on the trade, but we were able to roll those positions out one more week, and that's what you see illustrated here, and we absolutely crushed it there. You can see I brought in 230 on this leg, 250 on this leg. So again, the goal is about $250 a week in income, and we almost doubled that here for this week, very close to almost $500 in income this week. And I would not anticipate that we're going to be able to bring in $500 a week in income, but even $250 a week, $1,000 a month in income on this trade will work itself out quite nicely, I believe. And then last but not least, we have a Microsoft trade. That's a full iron condor on that. We're down to 19 days on that. And Microsoft, much like a lot of the FANG stocks, Microsoft's kind of getting included in the group of those technology stocks, the FANG stocks, that are pushing to all-time highs. But you can see that it has over time now, going back almost all the way to maybe the first part of November now, you can see starting to really establish a top up here once again. Now, it established a top down here as well, starting in August, starting in the latter part of the summer this year. And of course, it has blown right through that. So it still remains to be seen if this is a top that is going to be definitive and it's going to hold up here. But again, much like the Apple position, I do feel like Microsoft is a little bit overvalued here at this level. And so right now, it doesn't require any action on our part. We just need to continue to let that work. And if we need to adjust it, we will, because I believe that we are, with a lot of these tech stocks, running out of steam. So that's where we're at on our current positions. We got a lot of positions to start the week. Let's talk about our week coming up. We got some action, not as busy as it is usually, but on Monday, We don't have any really news announcements coming out this Monday, December the 13th. We do, of course, have our 0 DTE. That's the big one for Monday. That's always our focus on Zoom days, Mondays, Wednesdays, and Fridays. We got our 0 DTE that we'll be working on, and I would anticipate, much like we've had lately, as of late, that we'll get started probably earlier rather than later in the day on our 0 DTE. We, of course, are going to look to reinitiate our 4 DTE trades. That is on the SPY and the Q. We had a awesome week once again last week, and we are just over now our first year, our 1-year anniversary on doing 4 DTE trades. We started those December 7th of last year, and over the last year we have been a record of 50 wins and 4 losses. So 54 trades that we've done over the last year. 50 of them were winners, 4 of them were losers. 93% success rate. Our 4 DTE strategy has been just a real blessing for us in terms of so many things. A lot easier, more compliant, more flexible trade to trade than a 0 DTE. Not quite as much profit, obviously, as a 0 DTE, but really nothing is. But it is certainly a lot more pliable, easier trade to manage if and when they need adjusting. So very happy with the results on our 4 DTE trades. We'll look to reinitiate those on Monday as well with both the SPY and the Q. And then also we have our Iwm trade. Now, we've been doing a credit strangle every week on Iwm. And we're looking to get about 1% a week, 4% a month, 50% a year ROI potential on that trade. It's been tough the last couple of weeks. We've had successful trades. They have been profitable trades. We've been making money on it. In fact, I don't think we've had a credit strangle trade yet that has lost money. But in terms of ROI, they have been subpar over the last couple of weeks. So it's something that we're definitely going to look at reinitiating on Monday. But the ROI is going to need to be there in order to commit that capital to that trade. Otherwise, we'll probably pass on it this week. We'll take a look at it. We'll see what it looks like. On Tuesday, December the 14th, we've got a lot of trades that are going on right now that have a sort of bearish order flow. Let's take a look at those for just a second. So if I jump into our Discord server here and I look at our bonus training channel, this is where I post a lot of just sort of interesting items that I find for you guys educationally over the week as the days go by. This is one of the things that I found really interesting. It looks at the stock market's inflation adjusted or real earnings yield. And, you know, again, it just kind of points out something that we've known for quite a long time, that if you start to factor in the inflation rate that we're getting right now, we have not been this overvalued in the S&P, in the overall stock market for a very long period of time. And then something that I also found pretty interesting here over the weekend was this sort of idea right here that, you know, maybe we are already in a bearish market, specifically in the tech stocks, if you pull out the 5 biggest stocks. So as you know, most of the indices are cap weighted, meaning the bigger the company is. You know, in the S&P 500, not all 500 stocks have an equal weighting in that index, right? Everything is cap weighted depending on how big the company is. If you pull out the 5 biggest stocks in the NASDAQ right now, you can see the difference right there. There's the blue line is what the NASDAQ composite has done over time. And this is what the NASDAQ composite has done if you remove those 5 biggest stocks. We've really been in a bear market in the NASDAQ for quite some time, but you wouldn't know that by looking at the index because these 5 major stocks, technology stocks, big name stocks, FANG stocks, are pumping that up. But we have had a lot of action here as of late where a lot of very bullish names, a lot of them meme names, AMC, for example, GME, for example, BYND, for example, FUTU, for example, W, for example. These are a lot of meme type names that are now switching from more of a bullish stance to a bearish stance. And so on Tuesday of this week, we're going to be looking at doing some of these types of trades, some bearish order flow trades on Tuesday. So we're going to be looking at a lot of those on Tuesday, December the 14th. In addition to that, on Tuesday, we're going to be looking to initiate a 1 DTE trade on an index. It will most likely be the NASDAQ, but we'll take a look at that and see how that develops. We've had some tremendous success with our one and in some cases two DTE index trades. They're a nice little mix between our 4 DTE trades, which are a little bit more long-term focused, and of course our day trades, our 0 DTE trades, which are pretty frenetic and just fast action trades. These are a nice little combination, these 1 and 2 DTE trades. So we'll be looking for some some bearish trades that will be setting up as a bonus trade for us on Tuesday, as well as possibly a 1 DTE index trade on Tuesday that will expire for us on Wednesday. Wednesday, December the 15th, is our big news day of the week. We've got retail sales numbers coming out 1 hour before the cash open. We've got crude oil numbers coming out 1 hour after the cash open. We've had some tremendous success trading those crude oil inventory number releases on Wednesday mornings, and we are going to look to do that again. We don't currently have an oil trade on and working. We have our nat gas trade working, but we don't have a crude oil trade working. So we're going to be looking at the crude oil trade numbers here on Wednesday. We're going to be looking to put a trade on with that. Of course, the big news on Wednesday is FOMC meeting minutes will be released. We've got those coming out 2 hours before the cash close, and then the FOMC conference with Powell will be 1/2 hour after those numbers are released, with just an hour and a half left to go in the day. So we usually wait for the spike. There's always a spike of some kind. There's always activity of some kind once the FOMC meeting minutes are released at 2 hours prior to the market close. But the real action usually comes during the press conference as whatever sentiment is embedded starts to take hold. And so we will usually wait until after that to start or initiate our 0 DTE on Wednesday. It doesn't give us a whole lot of time to get a 0 DTE in. Sometimes we're down to 1 hour left in the trading day before we get that 0 DTE started. But if my memory serves me correct, we have had not one single solitary time where we have used this approach on FOMC days where we haven't had a successful 0 DTE result. And so it is a lot of patience. It's a lot of hand wringing and just sort of sitting around all day long waiting for those numbers to come out. But that's what we're going to be doing on Wednesday. So we've got the oil trade Wednesday morning. We've got our 0 DTE. And then in addition to those two trades on Wednesday, the 15th, we've got Adobe, ADBE, which is reporting before the bell on Thursday. This is an earnings trade. We're winding down the earnings season right now. We'll have a new earnings season coming up here shortly, but we're winding down the current earnings seasons. But we do have 2 earnings trades or volatility crush trades that we're going to be looking at on Wednesday. Adobe reports before the bell on Thursday. So this is a trade that we will be putting on Wednesday. And then LEN, Lennar, this is a home company, home building company. LEN is the ticker symbol. They report after the bell on Wednesday. So those are 2 earnings trades that we'll be working on Wednesday. Thursday, December the 16th, we got jobless claims and housing stats coming out 1 hour prior to the cash open. We've got industrial production numbers coming out 15 minutes prior to the cash open. And then we do have nat gas numbers, not oil inventory, nat gas numbers coming out 1 hour after the cash open as well. We do have a nat gas trade going on right now, as you know. So we'll be looking at those numbers pretty closely to see if we want to enhance or do anything with our current nat gas position on Thursday, December the 16th. FDX, this is FedEx. They are reporting after the bell on Thursday. So this will be another earnings volatility crush trade that we're going to be looking at initiating on Thursday, December the 16th. And then on Thursday, December the 16th, we're going to be looking at initiating another 1 DTE index trade that will expire the following day, the next Friday. And again, we've had some tremendous success with those. Generally, it has been on the NASDAQ. I would anticipate, unless volatility and option skews change dramatically this week, which they obviously could, that we would continue to probably use the NDX, the NASDAQ, for that. That's where the volatility skews and the put premium has been in the NASDAQ, and so we'll probably continue to work that. And then last but not least, on Friday, December the 17th, we do have another 0 DTE day in front of us. So pretty light week relative to what we normally are seeing in our order flow, but we obviously do have quite a number of trades already working in our portfolio. So I would imagine that this will be just as busy a week as we have always had once everything is said and done. We'll see you guys Monday morning in the live Zoom session, and we'll talk to you guys in the live chat room. Take care, and we'll see you soon.